So very good evening, all of you guys. So today's session is for CS executive exam on company account subject, and Professor Vishwas Krishna is going to discuss about accounting standards in today's session. So now we are going to start this session, and we'll meet at the end of this session. Thank you, guys.
Now let us move to the next lesson, that is accounting standards. From the point of view of importance with regard to the exam, you will hardly get about 5 marks out of 100 from this chapter, and this is also not so sure. You may get a question from this chapter or you may not get. So if there is paucity of time, I would suggest skip this chapter completely. So because this chapter involves lots of study, and the kind of portion which they have included here is CA final level, that is at least the portions of, because they have included all the accounting standards and also some IFRS here. If you have time, if you are writing in December, then I would say go through the chapter, otherwise I would say skip it. But still, what you can do is, instead of reading the chapter thoroughly, you can just listen to this, and then maybe you can if at all you get questions based on what we have discussed here, then you can answer those questions. I just went through the past 5-6 attempts question papers and saw if there is any question relating to accounting standards. Of course there are, in some attempts they have skipped it, but the kind of questions which they ask are very generic. So let's see if we can look at those few points. So what I'll be doing is I'll be covering few of the most commonly asked questions or the generic terms. I won't be going in detail with regard to the accounting standards per se. So therefore, once again, I'm reiterating the same. If at all you have time, please go through this. If not, I would say concentrate more on the practical problems, because chances of you getting more marks are there than here. Anyway, with that thing clear, let us look at the chapter itself. Accounting standards. Accounting standards have been formed so that we will have a unified way of reporting the financial statements, so that everyone is reporting on the same standards. Entities are not using different standards for reporting. So one of the main reasons why we use accounting standard is it is easy to compare and then contrast as to what is happening between different entities. So because of this reason, we have these type of accounting standards. And of course now we are moving towards the international AS. Now it's called IND AS. So earlier also it was IFRS. So now we don't have the AS. Slowly we are moving towards IND AS. So let us see what exactly we have here. Introduction. Accounting standards have assumed great significance in today's environment, of course, yes, which is constantly evolving and changing. 100% true, because a few years ago it wasn't the same. Now it has been radically changed, and it has been made compulsory. That is, the new IND AS has been made compulsory for few entities. Very soon it will be compulsory for all of them. Now you have a choice, at least for some, in some cases. Accounting standards act as a pillars of sound financial reporting system of a country, which is an integral and important part of good corporate governance, they say. And it provides the stakeholders useful information about the entity to make their economic and financial decisions. That means what? Based on this, you will be able to make some financial decisions or economic decisions looking at the implementation of accounting standards in an entity. To strengthen the financial reporting system existing in the country, accounting standards are formulated or revised from time to time, so that we have some kind of consistency. It's the most important thing here is consistency as well, along with uniformity. So the other thing. Now let us look at the meaning. Accounting standards, that is AS, are written policy documents issued by expert accounting body. Accounting standards covers the aspects of recognition, as to how do we recognize something, whether it should be recognized as loss or recognized as income, or when to recognize, and measurements, how much income to be recognized, how much of loss to be recognized. Once you recognize, how do you treat the same, and how do you present it in the financial report, and what should be disclosed with regard to accounting transactions in the financial statements. Thus, AS are guidelines for financial accounting, as how firms prepare and present its, as to how firms prepare and present its business income and expense, assets and liability, basically the balance sheet and profit and loss statement. According to Section 2.2 of the Companies Act, accounting standard means the standards of accounting or any addendum that is in addition thereto for companies or class of companies referred to in Section 133. That's how it is. Very simple definition. Whatever is referred to in 133, they simply are directing towards that definition. The CG, that is the central government, may prescribe the standards of accounting or any addendum thereto as recommended by the ICAI, constituted under CA Act 1949. So the central government is going by the recommendation of ICAI because they are the ones who kind of authority on the accounting and auditing standards. Therefore, they have taken the lead in this area. Then they will consult with the National Financial Reporting Authority as well. So after consulting with them, they will issue the accounting standard. So what are the objectives? Sometimes they will ask this question as well for 4 marks. What are the objectives of accounting standards? To harmonize different accounting policies and accounting policies used in a country. That means to bring together various accounting policies. To reduce the accounting alternatives in preparation of financial statements. So as far as possible, we'll try to reduce the alternatives. If there are 10 alternatives to record a particular thing, then 10 different entities may record in 10 different systems. So we have accounting standards so that all those alternatives are reduced and they are reduced to, let's say, manageable number, let's say 2 or 3. Then it's at least easy to compare. To ensure comparability, that is the next point, so that we can compare, again it's a natural objective, to call for disclosures beyond that required by law. So whatever is required by law will have to be disclosed. What if there are certain other things which needs to be shown in the financial statements as well? In such cases, we use accounting standards. Formation of ASB, that is Accounting Standards Board. So ICAI constituted ASB on 21st April 1977. ASB of ICAI has been issuing accounting standards since then. So they are the ones who issue Accounting Standards Board. So they first of all issue a draft and then it will be commented upon and then finally it will be released as an accounting standard. So what else do we have? ASB takes into consideration the applicable laws, customs, usages, business environment prevailing in the country, and then it will give due consideration to international accounting standards as well, and they will try to integrate them. That is, unify the Indian accounting standards which have been decided based on law, customs, usage and business along with the international ones. So how is the ASB composed of, or what is it composed of? So let's see, nominee of the central government, one person will be there nominated by the Company Affairs Department. Then there will be nominee of central government once again representing the CNDAG office. Then central government representing the Central Board of Direct Taxes. So this is mostly the ROC. Then we have CAG. This is CBDT, the one which controls income tax. Then ICWA, ICSI, now this is in fact called ICMA, something. Now they have changed the name. They changed the name several times anyway. So representatives of industry associations, various industry associations, they also are part of the Accounting Standards Board. Then we have other things as well, RBI, SEBI, CGA, CBEC, this is Central Board of Excise and Customs. So this is like CBDT for indirect tax. Then we have academic institutions. I don't know why they have been given representation. Of course, here in this case, Indian Institute of Management. Representative of financial institutions, if there are any. Eminent professionals co-opted by the ICI, if they think that they need to be co-opted. Then other representatives of industry as well. So once again, they might ask a question based on the composition of Accounting Standards Board. As I said, sometimes they'll ask very generic questions which has got nothing to do with any of the accounting standards. In such cases, you'll have to remember the composition. So if at all they ask such questions, at least remember about 6 points, because accounting standards will not be asked for more than 5 marks. So you need not have to write all of this. Now we have 15 points here. You can't write the entire 15, of course. Write at least about 6 to 7. That should be more than sufficient. Objectives and functions of Accounting Standards Board. Now that we know what is it comprised of, let us see the objectives. Again, it's all repeat here. to conceive and to suggest areas in which accounting standards needs to be developed. Sometimes what happens, there will be new area, new field. For example, all of a sudden we had this e-commerce boom, and now we have so many e-commerce sites. So how to treat the transactions of e-commerce, etc. Maybe the board, if they feel that that also requires a specific standard, then it might suggest to have a new AS for e-commerce transactions. I'm just giving an instance. It's not as if it is required. To formulate accounting standards with a view to assisting this council of the ICAI in evolving and establishing accounting standards in India. So whatever is existing, how to evolve and how to establish them, because whatever is there is not final. It has evolved over a period of time, and it can further evolve as well. So that will be done to assist to ICAI to examine how far the relevant IAS or the International Financial Standards or International Financial Reporting Standards, that is IAS and IFRS, can be adapted while formulating the accounting standard, and to adapt the same. So to what extent we can adapt and how do we adapt the same. To review at regular intervals the AS from the point of view of acceptance or changed conditions. So the condition need not necessarily be the same. So whenever they were issued, the condition might be different. Now, of course, it's like, say, let's say 5 years have passed since a particular standard was issued. Maybe that is not relevant today. In such cases, they will have to simply delete such accounting standard. Or if its relevance has increased, maybe then the accounting standard has to be expanded upon. To provide from time to time interpretations, guidance on accounting standards. Sometimes what happens, whatever is there in the accounting standards will not be sufficient, therefore we'll have to interpret and give the guidance to entities. So that will be done by ASB to carry out such other functions relating to accounting standards. If at all there is anything, it's kind of etc. field. So whatever is left will be done by ASB as well. So those are the objectives. Just remember the objectives, that's more than fine. Scope of accounting standards. Again, it has to be issued in conformity with the applicable laws. It cannot be independent of laws. That's the point. So law cannot be saying one thing and accounting standard cannot be saying something else. So it has to work within the purview of law. Then customs, what is the present custom of a particular thing in India, how exactly we follow, and usages, business environment in India. However, if a particular accounting standard is found not to be in conformity with the law, the provisions of said law will prevail. That's what I said. So the law will prevail over the accounting standard. So law comes first, then AS. Accounting standards by their very nature cannot and do not override the local regulations which govern the preparation and presentation of financial statements in the country. So whatever local regulation we have by way of various acts like Income Tax Act, Excise Act, now of course GST Act. So whatever is there, that prevails. Then comes the accounting standard. So then, but ICAI will, what it will do is, it will determine the extent of disclosure. So it can have an AS wherein it can say, this particular AS though is not in conformity with the law, but still this is the situation with regard to this particular item. Let's say e-commerce. There is no law on that matter. In such cases, at least the standard can disclose at what exactly is happening with the company. So they will have to issue an explanatory note like clarification. Okay, and it need not be treated as an adverse comment. So just because there is nothing on the law, just because there is something different in law and different in AS, doesn't mean that it need not be followed, just that it has to be disclosed in the financial statement. The accounting standards are intended to apply only to items which are material. That means if there is something immaterial, let's say there is a company with 3,000 or 300 crores even turnover, and there is some item worth rupees 1 lakh. And you cannot be worried about this 1 lakh worth of item. So this 1 lakh worth of item in this case is not material. So therefore, you need not have to worry from the point of view of AS. Then what else do we have? In formulation of accounting standards, the emphasis would be on laying down accounting principles and not detailed rules for application and implementation thereof. So what are we mostly worried about is broad framework, not exactly the details. So if the broad framework is followed, or if there is any framework or vision as such, then it's more than sufficient. Then we can work on the details. Procedure for issuing an accounting standard. Again, this is very interesting. So the ASB determines the broad areas in which accounting standards needs to be formulated. And then the ASB will be assisted by study groups constituted for specific subjects Then they'll prepare a draft mentioning the objective, what is the scope of that particular standard, definition, recognition and measurement principles, and presentation and disclosure. So they have to do all this, and then there will be a preliminary draft by the study group, and if there is any revision of the draft required, it will do based on the deliberation, that is meetings within the ASB, and ASB will make the same. Then they will release the exposure draft. Exposure draft is the next stage, that is after preliminary draft. So it will be issued for comments by the members of the institute and public. Anyone can comment. It will be notified and it will be usually on their website. So they will give some time, like 30 days, 2 months, something like that. Then after taking into consideration the comments on this public exposure draft, so they will finalize the standard. Sometimes they will add something, sometimes they will remove something from the AS which they had proposed based on the comments received. So then the council of ICA will consider the final draft. And if the council thinks it is necessary to modify the final draft, it will consult with ASB and modify the same. If there is any substantial revision of the accounting standard, the procedure followed for formulation of new accounting standard as detailed above will be followed. So this is interesting. For example, let's say AS 11 on financial transaction. If ASB or the ICA thinks it needs to be completely overhauled, then we'll have to follow the same procedure, even for overhauling an existing standard. Subsequent to issuance of an accounting standard, some aspects may require revision which are not substantive in nature. For this purpose, ICAI may make limited revision to an accounting standard. So even then, it will be similar, that is draft, preliminary draft, exposure draft, and then comments, and based on that comments, the board will finalize the same. Now let us look at the procedure for issuing an accounting standard. So how does the ASB issue the accounting standards? So again, this might be asked. This is easy to ask, and I mean, easy enough question to answer as well. The ASB determines the broad areas in which accounting standards need to be formulated and the priority in regard to the selection thereof. If there are 10 different areas which it thinks are important, then it will have to prioritize as to which area is important first, and then based on that they will have to start elaborating or discussing regarding that particular area. For example, there is e-commerce. So there is no AS for e-commerce transactions. How do we treat them? Or if there is anything like how do we treat UPI transactions? This is something which started after the demonetization. So we have various apps, for example, Bheem or even PhonePe, the other popular apps. So how do we treat these kind of transactions? How to account for this if there is anything with regard to these transactions? For this, we do not have any AS as such. So the ASB, that is the Accounting Standard Board, might deliberate on such issues. In preparation of accounting standards, the ASB will be assisted by study groups constituted to consider specific subjects. So, for example, if there are 10 different topics which it thinks are important, it will constitute 10 different study groups to deliberate on the same or to consider such specific subjects. Then they will prepare the draft, of course, and the draft will include all this. What is the objective of this particular standard? What it seeks to address? There should be some problem and they're probably suggesting a solution. What exactly is that objective? Then scope of the standard, how much of that particular area it covers. Then definitions of the terms used in the standard. This here we are entering the technical side of the standard. So various definitions which we'll have to consider. Then recognition and measurement principles. So how much, what exactly, and then when to recognize, all these things would be deliberated as well. Then presentation and disclosure. So what to finally show in the financial statements. The ASB will consider the preliminary draft. So this, whatever is prepared first, is known as preliminary draft. Then it will be considered for revision, and after deliberations the ASB will make a exposure draft. This exposure draft of the proposed standard will be issued for comments. So this is very important. So mostly by the public and members. So the members and public will have to comment on that exposure draft. After getting all the comments from all the stakeholders like stock exchanges, interest group, other interest group as required, Then they will look at the comments and then prepare a draft of the proposed standard. So this draft will finally be finalized by the ASB and submitted to the Council of ICAI. Then what will the Council of ICAI do? It will consider the final draft. So final draft will go to them, not the other drafts. And then if found necessary, modify the same in consultation with the ASB, because the ASB is the one who actually formulated the draft. So if they think there is any change which is necessary, they will have to first consult ASB, and if the ASB is agreeable to such change, then it will give assent to that, and the same will be then finalized. Again, if there is any substantive revision of an existing standard, we will have to follow the same procedure as above. That is draft, preliminary draft, exposure draft, comments, then finalization. Sometimes what will happen subsequent to issuance of an accounting standard, so some of the standards they require changes. For example, I will give just an example. AS 11 is on foreign exchange transactions. Maybe when it was issued, the foreign exchange transaction was of a different nature. Now it is of completely different nature. In such cases, we will have to revise, which is very like in substantive nature, that is to a significant extent. In such cases also, it will have to follow the above process of preparing the preliminary, then final draft, comments, etc. Compliance with accounting standards. So to whom it is compulsory? So let us look at that. The mandatory status of accounting standard implies that while discharging their attest functions, that is signing the financial statements, it will be the duty of members of the institute, that is ICAI in this case, to examine whether the accounting standard is complied within the presentation of financial statements covered by their audit. So they will have to mention explicitly whether A's have been followed while preparing the financial statements. If there is any deviation from the accounting standard, they will have to make adequate disclosure as to what is the deviation and why is there such a deviation. Ensuring compliance with AS while preparing the financial statements is the responsibility of the management of the enterprises. Statutes governing certain enterprises require of the enterprises that the financial statements should be prepared in compliance with the accounting standards. That means statutes or the laws, for example, Companies Act itself, it requires that the companies prepare the financial statements which is in tune with the accounting standards. So they cannot deviate from such accounting standards. Then IRDA also mandates the same, that is the act which governs insurance companies. Financial statements cannot be described as complying with accounting standards unless they comply with all the requirements of each applicable standard. So let's say there are 5 different accounting standards which are applicable to an entity. If they follow only 4 accounting standards, then it is said to be not complying with the accounting standards. It will have to follow all the 5 which are applicable to that particular entity. Applicability of accounting standards under Companies Act 2013. So what's the latest change according to the new Companies Act 2013? Section 121(9) of the Companies Act 2013, the financial statement shall give a true and fair view of the state of the affairs of the company, comply with the accounting standards notified under Section 133, and shall be in the form or forms as may be provided for different class or classes of companies in Schedule 3. That means Schedule 3 will prescribe the form or different forms, and that should also be kept in mind along with the accounting standards. So this has to be seen by the auditors. Then Section 129(5) of the Companies Act, without prejudice to subsection 1, where the financial statements of a company do not comply with the accounting standards referred to in subsection 1, the company shall disclose in financial statements the deviation from the accounting standard. We already discussed this. The thing is, why a company is deviating from AS and to what extent, and will that deviation continue for the next period, or what is the remedial measures that the company will take to remove such deviation. So in the latest Companies Act, we have something known as National Financial Reporting Authority. So they will also comment upon the accounting standards. So what do? Make recommendations to the central government on the formulation and laying down of accounting and auditing policies and standards for adoption by the companies or class of companies and also by their auditors. monitor and enforce the compliance with the accounting standards and auditing standards in such a manner as may be prescribed. That means they not only make recommendations but also monitor and enforce such accounting standards. Oversee the quality of service of the professionals associated with ensuring compliance. Which are the professions associated? It could be ICI members, ICSI members, and the newly renamed ICMAI members as well, or the cost accountants basically. Section 133, the central government may prescribe the standards of accounting or any addendum, that is addition thereto, as recommended by ICAI. So who has the powers finally? Ultimately it is with the central government. So after all these deliberations, it goes to the CG and then they will have to prescribe the standards. So then there is director's responsibility statement. So they will also have to mention whether the applicable accounting standards have been followed while preparing the financial statements, and if there are any material departures. What are material departures? We already discussed the materiality aspect. It is nothing but if there is any significant item which deviates from the accounting standard. Section 143(2), the auditor shall make a report to the members of the company on the accounts examined by him and on every financial statement which are required by or under this act to be laid down before the company in AGM. And see, this is something which we know auditor will be required to make a report. But so they should also make sure that the accounting and the auditing standards and matters which are required to be included in the audit report or any rules made under are also included in the financial report, and they are followed to the best of his knowledge, that is the auditor's knowledge, as given in the standard itself, and the financial statements present a true and fair view of the company state of affairs. So again, once again, they're saying the same thing. The auditor's report, it will say whether the company is complying with the accounting standards.
So thank you everyone for being this wonderful audience. और मैं अभी आपको चैट में शेयर कर दे रहा हूँ कुछ लिंक, हमारा टेलीग्राम चैनल का लिंक है, आप उसको फॉलो कर सकते हैं। और इस तरह की जो फर्दर वी विल वट एवर द सेशन वी विल डू फॉर दिस ईयर्स एग्जीक्यूटिव एग्जाम, वी विल गेट नोटिफाइड फ्रॉम दिस चैनल। Thank you guys. So we are closing the session now. We'll get back to you and we will come back again with next session for CS executive exam, our inter label for CA inter or CMA inter at this very same time 6:30 p.m. sharp from Monday to Saturday. Thank you guys.